Good afternoon, good evening, good morning. My name is Shilibo Mutiba. Yes, this is Financial Wellness Podcast, episode 1. Yes, today I'm with episode 1. Yes, I name my guest episode because they will be sharing their personal circumstances around tax and estate consequences that they might have experienced as part of their families or, for that matter, in their own personal circumstances. Therefore, as part of the discussion, I'll say, please listen to their stories because you could be learning or you could be going through similar issues and therefore learning one or two things. At the end, we're going to try to also come up with a solution, or for that matter, to say, had they had a chance, what they should have done, so that if you're out there and you want to implement the solution, therefore you want to listen until the end of the episode. Okay, let me welcome my guest today and say welcome, episode 1, and how are you doing?
Hi, Shili. Thanks for having me. I'm doing quite well. Quite excited to be the guest on the first episode, and hopefully I will share my story and as an awareness and as a knowledge gaining. I hope after this session, when we do the conclusion, I would be living out with something from my story or from my journey that I'm continuing with currently, that is on tax matters and estate.
Thank you so much. And thank you so much for allowing us in your privileged information and sharing. Do you want to maybe take us through what's happening in your life? Tell us your story.
It's that story actually of being I can say classified as so-called black middle class with some history of black small business, if I can say, and having worries about estate taxes and maybe taxes of moving assets into one's name, or also having disputes of assets from family, maybe from sharing our asset. But my personal story that I wanted to share today, and maybe or get advice on, it's actually my dad, my mom is late, passed on last year. And my dad and my mom, they had businesses, not registered formal businesses, small businesses operating in taxi space or taxi industry space. So there is now some assets that are there. And my father wants to, and houses that he has, obviously, properties that he has. But now, and this is surprisingly something that we found out, I think, about 2 weeks or 3 weeks ago, that when my mom passed, because they are married in community of property, they had to first ease the estate. And that was not done, right? And now this lady who was advising, she was like, no, we have to first ease the estate of the mom. And whilst we were still busy dealing with that, okay, Stefan, how do we ease this estate? He says, what is it that you have collectively together as a married couple? And my dad was like, yes, I've got this property, I've got this taxes. Then they're like, okay, fine. All those things. Where is the proof that you have, or you've got these assets under your name? And funny enough, some of the properties we can't find title deeds. So we are now going through municipalities, and it's paid off properties, well in their millions, but and now he doesn't even know how to do evaluations and all of that. And now you are saying, because I was like, in one of the sessions that we listened to, that whenever someone passes on, there is estate duties. And I had to explain, and I'm not so quite clued up and well vested with the estate duty tax. And I was like, hey, you need to pay this tax. Even now, maybe because mom is not here, you are liable for those taxes. And when you pass on, all of your assets, we will have to be liable for that taxes. And it was like, who's now going to pay for those taxes? And that's when the issue where we started to discuss, we only also find out that he doesn't have a will again. We're like, hey, so how are you planning to do? He was like, no, I just want to give you guys just to take my things and go ahead with them. I'm like, Mus, yes, you've got siblings, and it's only me and my brother who's left, And I'm like, hey, me and this guy, we don't sit and talk, like normal people, we don't even engage to say how we're going to run the business. He's not even interested, and I'm running with my business and my work and other stuff wherever I am. So how are you going to deal with it? He says, hey, monna o tla iponela le wena o monna o tla bona gore tswa bjang. Hey, but the thing is now, you leave us with all of your tax matters that you didn't resolve. And as you know, the business that you are in, you are not doing your tax submissions and all of these things. And I'm like, hey, it looks like you have got a complex issue. And I thought you are having it all sorted, but now it's all messed up. So now I'm in that predicament to say, hey, we have to deal with estate. We have to deal with duty tax. We have to deal with wills. And we need to deal with asset protection, because what he said is that please just make sure that whatever that I'm giving you, make sure that my grandchildren, they can benefit from this. And the question was that I posed to him, I said, how do you want them to benefit from this? And when you raised this question on one of the platforms where you said, hey, guys, are you guys planning for a generation or 2 generations? We need to now start thinking about how do we create wealth and maintain and preserve wealth. So I thought that this is the perfect platform for me to come through and have an engagement or a conversation with you regarding this matter.
I mean, from your story, thank you. From your story, I'm picking up that there are things that are already missing. For instance, there's no will that the old man has, or for that matter. On top of that, there seems to be a bit of tension between you and your brother. Am I correct to assume that?
Yeah, there is that silent tension. And since my mom's passing, the tension is starting to boil up, because some of the because there was an incident when he came. He says, yeah, mom, when you passed on, gave me these kids for these taxis. So I'm actually the owner of these taxis now.
Who are saying that? Your brother?
It's my brother. Yeah, that was my brother. And my dad was like, what are you talking about? This is my business. I'm still alive. How can your mom maybe decide? And then we're like, I mean, you can't speak ill of the dead. And that's when we started to realize, hey, you know what? Here there's something that is starting to become of attention. And we need to resolve it a bit. And that's when I approached him. I said, hey, Dad, how about maybe you sit with a legal person so that he can advise you, or so that you can get your matters straight before anything happens to you, because he's 74 now. He's quite old, and quite frail. So he's like, hey, Mona, I have to get these things right. So we got that appointment with one of the legal lady in our space, in the same platform. So he said, guys, start first. Let's start with the easing of estate.
Yes, the winding up of your late mom.
The winding of mom,
which is the requirement. Yes, because I think what we need to unpack is that your mom passed on. Guys, when you're married in community of property, so what happens is that when someone is married in community of property, everything's supposed to be frozen and be under the hands of an executor, right? Then the executor is going to, what he's going to do is going to submit the last tax return of the deceased, right? And then from there, they're going to take the whole joint estate, including those taxes, including the properties. So they have to go on what we call inventory list, investigate what is out there, investigate all the assets that could potentially have been owned, including whether it's financial policies, everything of the estate, right? And then bring it together, right? And then we also need to identify all the liabilities, right? The liabilities of that particular joint estate, right? Now, once you've got a net estate, right, after you minusing that particular liabilities, then we'll split it on half. Then the half will go, obviously, because they're married in community of property, the half will then go to the surviving spouse. Therefore, then after that, when the half goes to the surviving spouse, will potentially pay an estate duty only on the other 50%. And I think that is very, very important to be mindful of. We don't pay estate duty on the whole total amount. We pay it on the portion that belongs to the deceased, right? That's very, very important. Now, and I think this is where another thing that people are not aware of. The fact that your mom passed on without a will. Do you know that now the Interstate Succession Act kicks in? And Interstate Succession Act kicks in a sense that 50% that belongs to your mom, by law, it's supposed to be shared among you as children and the surviving spouse. That is how the hierarchy of sharing when someone passes on under interstate succession. But and this is going to be a very difficult one to tell the old man to say, we're supposed to be getting this. It could be a very challenging thing, especially where people don't understand how things actually operate. But some things can be overlooked, where you can repudiate those benefits and just give it to the old man, right? To ensure that there's harmony at home, because I don't see the old man saying, here's your property, here's your car, because by law I'm supposed to be given to you. You can repudiate. Repudiation is basically when a beneficiary saying, I'm not interested in getting anything from what do you call this thing, from the deceased estate. And I think that's very important to be mindful of. So now, with that said, so we've got a scenario now where your father also doesn't have a will. I think beyond the what do you call this thing, beyond the winding up of the deceased estate of your mom, you need to consider, and that this thing can also be done parallel. He doesn't have to wait until everything it's winded up or the deceased estate is, because it can take a long time. So he needs to ensure that he has a will. I think that is very, very important, and he needs to decide so that and he must involve you guys so that this tension is actually managed like that. I would suggest that he also involves you and your brother in this thing when he's drafting this will, because there's nothing anymore to be shy or to be hiding anymore. I mean, he's old, so it's important to involve you guys and say, listen, this is what I'm thinking, this is what I'm proposing. And yes, so that should I pass on, there mustn't be argument. And it would be nice when things are done like that in front of everyone. It minimizes, doesn't mean that conflicts might not arise, but it's sort of a minimize consciously. If someone comes and argue, well, everyone was in front of the tester when they were finalizing their will. So it makes it much better to deal with after death conflicts. But I think that's another thing. But another thing that I'm picking up is that your family does not have a centralized point where all important information are stored. And that could be another way of losing wealth. Right now, imagine that now you are not even aware of some of the properties that you're talking about that your dad actually owns and your mom. Imagine if he passes on, how are you guys going to identify his properties? What if there are other properties that he forgot even now? You understand? And I think that is something that you need to take upon yourself to say, we literally need to go on an audit, including using and running reports on background check using his ID to say, what does my father actually owns out there? What insurance policies, what life covers, what investment that he has ever taken. Let's investigate all these things and then bring them and make sure that they're in a centralized point. We normally call it a live file, where people they create a file and then they put everything together that actually belongs to a particular person. Each person should be having that. as soon as you are an adult, you should be having a live file where you are storing all important information and about yourself. So I think that's one of the things. I see you want to come in episode 1.
True, because I never even thought about it, because currently that's what I'm doing, and this is just, your file or that bag that you keep in the house where you are keeping all your documents. It's even now, because while we are still collecting this documents or evidence, almost when you're in the taxi business, you've got these things that you call operating licenses.
Yes.
So even some of this information, because that is an asset on its own.
Yes,
the
correct.
operating license itself, it's an asset on its own, because when he passes on, the information needs to be transferred to whoever will be taking over the business, or will be running the business. This information in this, it's all over. And some of it he doesn't even know. Even just yesterday, he was calling me, says, "Hey, do you have this one with you?" I'm like, "No, I only have one, which was renewed last year. But for these other ones, I don't have." And I was like, "Hey, you know what? The person who used to control this information was your mom. I don't know." And just now trying to talk to a point and emphasize that, keeping record, it's easy. And you need to make sure that you maintain that information. And currently, as it is, it's just a nightmare. We don't know where is the information. I've been running, I think now it's about 4 or 5 months with municipalities, and with other municipalities that are dysfunctional, they will say, "Hey, this property was bought 30 years ago, and it was this property sale at the government, where people were just paying rent, and then in 1998 they got title deeds, and then the business were registered, and some of the properties he built it himself from scratch, so you don't have anything of that kind, of that sort, to say, hey, where am I gonna start? And now we're like, hey, we have to start from scratch. And then now that's where we are coming into this platform to say, hey, who can advise you? Say, how do you start? Like you are saying, I don't even know, maybe that's a funeral cover, life cover. He owns how many houses, how many taxis. You don't know, because they're just been doing their business as a couple for some time, because they were married for a very long time.
And you see, it's important to ask those questions. You are lucky. I think you are lucky where you've got opportunity to ask such critical questions right now. Imagine someone who is faced with this, has to prepare the funeral. They don't even know if their parent has those funeral covers. They end up losing money that is sitting somewhere. I mean, we're talking about billions and billions that are sitting with financial sector that are unclaimed, mainly because the surviving kids and the surviving spouses of the disease are not aware. You understand? The beneficiaries can't be located, and you are privileged that you've got him still alive. I'll make it my mission to go and make sure that I fix every little thing when he's still alive, because that is your wealth, by the way. That is the wealth that exactly is right. So he wants to make sure that his grandchildren achieve this wealth. So you want to preserve as much as possible. And I think that should be your homework, to go and run an audit. I'll just call it an audit. You do an audit of the old man to say, what do you own out there? And let's find it. Let's bring it. All the title deed, even if it means involve because you can also go to the what do you call this thing, deeds office. By the way, you can even go with him and then get copies of the title deeds. You don't need to go to the municipalities to get the title deed, or you can go to the deeds office also. But in our context, we are saying there were those properties that they were rent to buy and things like that, that involve the municipality. Maybe then that's the conversation that you can then directly go to the municipalities. Is important to then go through that process, so that process is finalized, or even for that matter, it started when he's still alive, and there's documentation, acknowledgement. He can even give you a power of attorney. You must make sure you've got even a power of attorney, by the way. he must sign his sign over power of attorney, so that, should anything, God forbid, happens, you've got processes to represent him. Those people at the municipality should already be aware, and they must acknowledge that they are aware. Basically, you're just creating safeguards. Create safe as much as possible, so that you're actually preserving this particular wealth. As he mentioned, he wants to make sure that his grandchildren are actually going to inherit this at some point. But how are you planning to deal with the disputes that just kind of arise a little bit, where one beneficiary is saying that my mother said, I'm gonna own these taxes? How are you guys dealing with that?
To be honest, we had the first meeting first with my dad, because it came as a surprise and everyone was shocked.
Yeah.
And he was like, "Hey, my man, I have to talk to you on the side, because what this guy is saying, it's a bit worrying and concerning." And I was like, you know what, so that we don't make these decisions emotion and react with emotions, let's calm down and then go and have a discussion. Right. And then after having that discussion, he said, "Hey, you know what, let's call him in, and then maybe he give us more information or details as to, or maybe what he was saying, he was just saying out of the spur of a moment, or maybe he was just maybe disgruntled with something." So we said, no, let's calm down and then have that conversation. And in having the conversation, you could see when someone is a bit reluctant to give out information, or he's like, he doesn't want to entertain the topic anymore. And that's when we started to say, and I started to say to my dad, you know what, this thing is concerning. And now that I know that you don't have a will, my interest is to serve your interest. I don't want to benefit much, or even technically, you've worked for your asset and everything. It belongs to you. As to who you give it to, it's not a problem to me. But just make sure that your wishes beyond your grave, you are achieving your wishes. So if you want to give your assets to your grandchildren, make sure that you do that. I'm just going to guide you or direct you to some of the people that you can talk to. When you make the decision or you make the choice, let it be about you. Think about it, and then think how you want to give or distribute your wealth to whoever, so that you don't create conflict, and also you do your wishes. I mean, you fulfill your wish to say, I'm going to give this to my grandson, or I'm going to give this to my granddaughter, and my family house will be maintained in this way. And I will just take you by hand and then take you to the right people that you can talk to, that can assist you and help you. So that's what we technically wanted to, where we wanted to start, just to get an advice from the right professionals to get a professional advice, and then we can take it from there. That is the plan.
Okay. Is the plan, the question is, you, the viewer who's watching or listening for this, how are you dealing with family disputes when it comes to contested wealth? Likely the parent is still alive. Imagine if this parent was no longer alive. How would you go about dealing with family disputes? Maybe you've encountered these family disputes where people are fighting and your siblings were fighting you over wealth. How did you deal with such a situation? Please share with me on the comment sections and tell us, how did you deal with this matter? And then, so that we can learn from you. Maybe you want to be interviewed by myself about your family circumstances, please, you're welcome to reach out to me, and I'll keep you anonymous so that we can learn and empower each other on how to deal with and preserve wealth. But while I rag about this episode 1, the circumstances that they had a meeting, right? And they realized that we've got a problem here, potential problem here. How do we diffuse this problem to ensure that the wealth is preserved, to make sure that the wishes of the old man is actually preserved? Because at the end of the day, it's your constitutional right as the estate planner to ensure that the wealth that you have, it goes to whoever you want this wealth to go to. That is your constitutional right. That's what we call testator right, testation right. No one can take that away from you. You've got a right to decide on who gets what at what point when it comes to wealth. That's why will is so very, very important, because it gives you that constitutional right to decide on who gets it. But equally so, we understand that there are emotions involved in this whole thing. You want to sit your family down, you want to engage them, you want to make them understand why you're doing certain things. You must take along your family members when it comes to estate planning. But I like the fact that in this circumstance of episode 1 situation is that they are taking this matter forward. They are saying, we are recognizing that we are not clued up and we're not experts in this matter. Therefore, we want to sit down with the experts in this particular matter so that we can deliberate and discuss these issues, so that at the end of the day, we are making an informed decision. And I think that is key here. And the nice thing is that the entire family is agreeing that, yes, we need to see and meet with informed professionals so that they can guide us in this matter. And then so that the old man makes an informed decision. So that, I think that might address the family dispute so that this wealth is preserved. But I see this matter going to be resolved. The fact that they're engaging professionals, also into the fact that the deceased estate is also going to be winded up by the experts. I like that. And I think also the fact that the beneficiaries are also involved in doing the audit to ensure that at the end of the day, the old men also have what you call life file. What is this life file that we're discussing about? Which, if you are looking for wealth life file checklist, you're more than welcome to send me a message or a WhatsApp on 0745896439, and then I can share with you the checklist on life file. Life file, basically, it helps you to ensure that you put together all your important, it reminds you what are your potential important documents that you need to put together. You can even create one for yourself and then make sure that you actually put what is important. You don't want to wait when it's too late, and then your families are running around. They don't even know some of the investment. These days we co-invest with people, but we don't even tell our families, and therefore, upon your death, a family are running around. They don't even know where things are. And that is so. I think maybe in closing, I like what you are proposing there, and I share the sentiment. Make sure that you see the aspects, and then make sure that you also have a will for the old man, and of course deal with these potential disputes among the beneficiaries, and make sure that thing is addressed. But of course, also make sure that the tax affairs are up to date. Why? Because we're going to need clearance before we transferring these properties to the beneficiaries. And if it gets found that your tax affairs are not, SARS is going to be within its rights to actually do an audit. And that might not actually be fun. And this is where most people actually lose wealth. Because why? Mainly because by the time they pass on, they owe so much money, but then all those assets end up having to go and settle the tax liabilities. And we don't want to find, well, you're thinking that you're working so hard to preserve and create wealth for your families, but only to find that you're actually creating and building up a tax liability. So I don't know, in partition episode 1, do you have any closing remarks from your end?
Yeah, I mean, just before I get on the closing remarks, Chidi, I'm glad that you mentioned the tax part of it. And I probably maybe this might be a conversation for another day or with the next guest. Or it's just that we don't have time to unpack that one, because I just wanted to understand how this calculation of estate duty works and what happens now if, because it's, we're only learning about trust and all of those things now, and we don't know how it, maybe transferring assets of someone who's my dad's age into a trust, and how do you get those things so that his wealth can be preserved? Because obviously with this dispute, we don't know how far they can go, and we don't know the motives, and we don't know maybe if we might find in the process. And what if we don't find each other in the process? What will happen if the assets are being disposed? What are the tax implications, both on my brother's side and on my side? But I think there's a conversation for another day, maybe.
No, I think we can unpack it. We can quickly unpack it. So
that would be great.
The formula of estate duty, as I said earlier, we're going to look at the gross estate, right, minus the liabilities of the joint estate. Remember, these people were married in community of property. Then, once we removed everything that the joint estate owes, then we're going to split it in half, right? Then the old man will take his own estate, half, 50%. Then of that 50% is the one that potentially going to be subjected to an estate duty. What is the formula? Then we're going to look at what is it that goes to your father under the whatever the claim, right? Then it gets deducted, right? Then we're also going to minus against 3.5. Each person is allowed a deduction of 3.5. It's a rebate. Then once we've got a net value, is the one then we're going to use a percentage to calculate an estate duty. Anything up to 30 million, it's about 20% of that. Anything above 30 million is 25%. Okay, that's how estate duty works. However, we also need to be mindful that when someone passes on, it's also deemed disposable, they're deemed to have sold their assets. So any asset that doesn't go to the surviving spouse, there's a capital gain tax implications. Okay, so we obviously don't have the numbers to determine whether there will be any tax or not, but just be mindful of that. Okay, any form of income that is earned while we're still doing the winding up, the deceased estate needs to obviously submit tax returns. It's a new taxpayer, as we call it. Okay, so that is what you guys just need to be mindful of. And you don't need to worry, because that is the role of an executor. An executor, whoever is going to be appointed as an executor, must be able to do all these things. Both dealing with the Department of Justice through the Master of the High Court, and also dealing with SARS. Those are key stakeholders when it comes to winding up of the estate. And that is very, very, very key that you guys need to understand. Okay, so that is sort of how to go about that. So the other question was about dealing with assets, right? Moving assets, whether he needs to consider a trust, or I think firstly we need to understand his wishes. What are his wishes? He needs to be able to tell us, these are my wishes. Then from there, you are able to come up with a potential solution to be able to reach those wishes. Because, for instance, someone can say, I want all these assets to reach my grandchildren. Then it might mean that you guys don't inherit anything. You end up just becoming income beneficiaries, but the capital beneficiaries are the grandchildren. So that also could be something else. But then we also need to ensure that whatever we are creating, solution that we are creating, it's sustainable. And everyone must understand that the old man is saying, should I pass on, everything must be moved to a trust. That's normally what we call testamentary trust, a trust that is formed upon someone's death through a will. Then all those assets, every little thing that is an asset, will move into the trust. Okay, then he can then stipulate, if he wish so, saying these current kids that I have, they must just be income beneficiary. What is an income beneficiary? It means you guys will just only be taking an income from those assets only. The capital component will belong to the grandchildren. So that is if someone wishes that things move from beyond you guys. That could be another solution. Or for that matter, it could be that, should I pass on, I need 2 trusts to be formed, one for episode 1 and one for the sibling of episode 1, as an example. Therefore, and then the assets must be divided in half, or identifying, he can even identify, so that we don't create a fragmented assets, what you call fragmented assets, where assets is owned by more than one person. So you want to make sure that it's easier, the winding up of your estate is easier. It could be that 1, 2, 3 properties, they must go to episode 1. The 1, 2, 3 assets, they must go to a child, a sibling of episode 1, right? And then, but then episode 1 and the sibling, they are not entitled to the assets, but their grandchildren are the ones who are entitled, who are going to be capital beneficiaries. You see, that is when someone wants to make sure that this thing goes beyond the current kids, but it reaches the next generation. So I think that is, in a high level, what I could potentially say that could potentially work, but we need to understand the wishes. We need to sit down and understand what are these men's wishes, because he needs to be free. He needs to tell us what are his aspirations. Then we'll look at the tax, we'll look at the viability of what he's trying to achieve, because there's a lot of non-financial factors that one has to address and understand. And I think one of the things also that you guys must be mindful of is his estate liquid enough? Because there are those costs that comes with death, whether it's estate duty, whether it's income tax, executors fees. You might find you guys having to pay money that can go into thousands and thousands, but you find that someone is asset rich, but actually the estate is not liquid, and that could actually also make people lose wealth, because then we're forced now to sell assets so that we can pay all these taxes and things like that. And this is where insurance policies come into party. So these are things that people need to, you might want to consider. And that's why it's important to engage people who are in this profession of estate planning like ourselves. So yeah, so if you're experiencing similar situation, I try to, as much as possible, to unpack and come up with a solution for episode 1. So if you are also experiencing similar issues, you're more than welcome to reach out to me, and we can address, me and my team can address your situation. Yes, and then from there we ensure that we empowering our people to ensure that we're preserving their wealth from one generation to the third generation, like episode 1, that they're trying to reach out to the next, or the third generation. By the way, did you know that more than 75% of wealth doesn't reach, or rather, it actually finish off in the second generation? Well, 90% of wealth, if you're creating wealth now, the chances are your wealth is going to the what do you call, by third generation will be gone. So why? There's just so much factors that one needs to consider in order to preserve wealth. With that said, thank you so much. This is the end of our episode 1 financial wellness podcast with Shilebo Mutiba. If you are interested in me engaging and talking to you about your family circumstances or your personal circumstances, you're more than welcome to reach out to me. Send me a WhatsApp on 0745896439, or for that matter, you want to engage our services, you're also more than welcome to send me that WhatsApp on 074-589-6439. Thank you so much for watching, and you want to say goodbye, episode 1?
Excellent. Chidi, thank you very much for such deep, insightful information. I'm truly grateful, and definitely I will be in touch with the office to get further professional advice on our future endeavors. And I'm grateful for the information. Thank you so much. And thank you for the opportunity.
You're welcome. Episode 1. Good evening, good afternoon, good morning. My name is Shilebo Mutiba, Financial Wellness Podcast with Shilebo Mutiba. Good day.